Hi there everyone, Merry Christmas, Happy New Year. I hope you had a great break and welcome into 2021. Don't forget that any advice contained within this video is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, what a year 2020, hey? Alright, now that's behind us. What's next? Okay, that's what we're thinking. So last year, just really quick recap, the market fell off its perch around February on the back of COVID-19. From there, we've recovered probably 3/4 of the way now on our market. So at this point of time, you know, we're a little bit stuck though. Okay, so we had that massive rally after the election. That's typical. It's a typical seasonal pattern to see after a US election. But furthermore, what you tend to see is the following year also continue the trend higher. If you go back over the last two elections, the year following, from the beginning of November, where the election finishes, through to the end of the following year, you know, you tend to get a 30 to 40% increase over that period of time. So it is a particularly normally very bullish time around those US elections and just after. But you know, it's not just the elections that make us bullish, guys. Okay, it's all that stimulus that's being thrown out there. We know that the Fed is going to continue this year on that current path. We do suspect that we'll see further US government fiscal stimulus once Biden comes in as well. So look, that's all fairly positive markets, guys. There's a bit more to talk about as we go along. Let's just dig into the technicals first and then talk to the detail. So from a technical standpoint, you can see here the XJ is still in an uptrend. We are, you know, a bit away from this longer term trend line at the moment, and in the very short term we are stuck in a sideways channel. Now when looking at a sideways channel, okay, that can either show a sign of continuation or reversal, and for us at the moment it's way too early to tell. A break up through 67.71 will confirm continuation of the trend, and the next few targets are around sort of 6,900 and then back up near the all-time high just below 7,200 there. So that's what we're looking for, really, is a break out of this sideways pattern. A break to the downside, well, we'll probably head back down near 64 here where that longer term trend line comes in. You know, the very high chance the market will find that as support. Now coming across to the S&P 500 in the US, a little bit different. They haven't been going sideways as such. They've been drifting higher, and they did push into all-time highs right at the end of the year last year, but then we've opened up this week quite a bit lower. Even though it's opened lower though, it really didn't break lower. Okay, it's still holding trend, guys. This is a bit of a pullback. That's all it is at this point of time. The big thing this week really that we want to keep an eye on is the Georgia runoff election. So that's what markets are going to be looking at in the very short term. Basically, there's two seats up for grab in Georgia, the Senate seats. If the Democrats get both of those seats, they will then have the majority in both the House and the Senate, which means Joe Biden will be able to push through his corporate tax agenda a lot quicker and easier. Therefore, the market's not going to like that, guys. Okay, there's a few analysts out there talking maybe 10% pullback. Look, I'm not going to buy into an amount of pullback, guys. Okay, I trade what I see. What I will say is I would believe that would be bearish markets in the short term. Longer term though, really at the end of the day, I think we'll see a fairly quick recovery from that if that were to play out, purely in the fact that, you know, you've got the Fed supporting markets at the moment. You've got the US government that will likely continue to do more stimulus through the year, especially with how bad COVID's getting over there. So really, you know, in the medium to long term, the market is a combination of virus, lockdowns, vaccines and stimulus, right? That's what swings the sentiment pendulum back and forth. So as we see more stimulus get thrown at the market goes up. As the virus gets worse, if there's not enough stimulus backing it up, then we start to see more lockdowns without extra stimulus. The market doesn't like it and pulls back a little. So far over the last sort of 3 to 4 months, stimulus has been winning, and that's why the market keeps going up and up and up and up. Right now, it's less about company valuations and more about stimulus, guys. Okay, so you hear a lot of people talking that some stocks are overvalued, and they're right, they are. We are in a very overheated market in the US, particular stocks in our market that are very overheated. But what everyone needs to remember is there's still a lot of companies out there that got sold down heavily because of COVID-19 that haven't recovered yet. There's still plenty of value left around the marketplace. You've just got to look. So even though the indexes seem overdone and up in all-time high levels, well, as long as you don't see heavy selling through that tech and stay-at-home stocks, and you do see buying in the value space, then there's still plenty of upside in this. And that's what you've got to sort of look at, is if you're buying in now, where is there still value? Where is the safest place to buy? And it's not necessarily an index, it's not necessarily a tech stock. There's plenty of valuable stocks out there that will recover over the next few years as things get back to some kind of new normal, COVID-19 normal. So, overnight we've seen, and this is just backing up what I'm talking about, overnight we also saw UK announce strict lockdowns. That's always going to weigh a little bit on the mood out there. So, like I say, it's really lockdowns, virus case numbers versus stimulus and vaccine at the moment. Okay, and we are seeing a lot of chat around vaccine rollouts here in Australia, in the UK, in the US. That's all going to start happening this year, and as long as that all continues to prove fairly positive, then markets, once again, it's going to help markets go up. All right, so as a trader or an investor, what you've got to do at this point of time for 2021, it's not going to be as easy as it was through November there, where you can just almost go long anything after the election and win. Right now, it's about getting back to looking at particular sectors and particular stocks, getting into the detail of what's likely to recover strongly in the next 2 years, and that's where you want to start thinking about investing. As I said before, especially in our market, there's plenty of value out there. Look at Fortescue and what that's been doing this week. Still running at a 10.5 PE. The sector's running at a 19 PE. Go figure, right? It's you got iron ore at record levels, and the stock's still sitting at a 10 PE. That's just one example of a very cheap value stock that's got good growth potential as well. And then many energy stocks, even though they're going to be hurting for some time, depending on how well these vaccines get rolled out, you could see a pretty good recovery in those areas over the next few years as well. So there's plenty of value there, guys. You're just going to know where to look. So, one of those spaces I've got to keep talking about is the travel space. Okay, so a lot of the travel space has pulled back over the last couple of months. One, it ran a bit too hard, too quick. Two, the extra cases. If you recall, like last year in South Australia, then that's a cluster that's moved around through New South Wales and now into Victoria is all weighing on that space. We've seen borders close again, okay, through many of the states. But you know what? Give it another month, give it a month or two, and that'll all go back the other way. And this is what I mean about opportunity. You've got to be watching now, because as those borders start reopening, you're going to find your Qantases, your Webjets, your Flight Centres all start increasing once again. So there's plenty of opportunity to come. Don't be fooled by some of these articles out there suggesting the market's way overheated. Yes, it is back near highs. Yes, the US is breaking into all-time highs. But with all this stimulus being pumped into the system, it does actually make sense. And it's now about timing, okay, the mood of the market. We know this week the market could become volatile on the back of the Georgia election, so just be careful of that. We know the market could become volatile after Biden gets in, depending on what agenda he pushes through. So keep an eye on events like that. But outside of that, medium to long term, still expect the market to go up. The Fed's the key. Keep an eye on them. As long as they stay very, very accommodative, then the market will generally go to the upside, guys. Just go back and look at QE 1, 2, and 3 after the GFC, and saw what the market did there. All right, that's enough from me. Plenty of opportunities still in 2021. You haven't missed out, guys. And I say that because that's the feedback. The feedback I'm getting from many traders at the moment, that they're worried they've missed the move. Don't believe you have. Just be wary of this week with the election. Outside of that, I think buying on a pullback is not a bad move at this point of time. All right, I'll leave you there. I'll see you all next week. Thanks for tuning in, and bye for now.